Hello, and welcome to Explain the Charts. Today, April 20th, 2025, we're taking a look at EURUSD, examining both the latest news and detailed chart data. Recent headlines indicate that the EURUSD pair is trading near its weekly highs, around 1.1400, influenced by the weakening US dollar due to ongoing trade tensions. Additionally, there are concerns about potential rate cuts by the ECB and the US dollar's safe haven status, which may be affecting the pair's performance. Now, let's dive into the charts to see how these events are reflected in the price action. Today, we will try to determine important price levels, unbiased predictions with how likely we think they may happen and what conditions would reinforce their likelihood, and things to look for if any are important or coming up. Looking at the one-day chart, we can see a broad view of EURUSD's price movement over the past several months. We observe a significant downtrend starting from around August 2024, bottoming out in early 2025, followed by some recovery. It is important to note the current UTC time is April 20th, 2025, 22:22 and 58 seconds, so this is very recent data. Not much has happened yet today. Now let's focus in on the price movement from January 2025 to the present, showing a series of lower highs and lower lows until about mid-February. After mid-February, it seems there's been an attempt to break out of this downtrend, but overall the price is just ranging up and down without any clear directional impulse. This could reflect the conflicting news we've been seeing, trade tensions weakening the dollar, but uncertainty around central bank policies creating some volatility. Zooming in further on the daily chart, we see a key resistance level around 1.1400. The EURUSD price has struggled to break above this level, which coincides with the recent news highlighting 1.1400 as a key peak. If the price breaks above 1.1400 with significant volume, it could signal further gains. The key support level is around 1.124, tested a few days ago. If it breaks this level, the price may fall further. Switching to the 1-hour chart, we can get a more granular view of recent price action. We see a lot of back and forth, where the price is struggling to form any convincing trends. To get an even more granular view, let's look at the 15-minute chart. On the 15-minute chart, we see very choppy price action. This is a lot of noise that makes it difficult to say where things may go. Given that, the most likely scenario is that the price will range in the near future. Let's recap all the important price levels. The 1.1400 area is a big resistance, and we think there's a 65% chance that's where it gets rejected. But on the upside, if it breaks past 1.1400, we think there's a 50% chance it'll go to 1.1500, at which point we may need to revise our estimates. The condition to reinforce this likelihood is if the DXY gets rejected further down.